Good morning, everyone. So here in this small session, I would like to decode the private equity accounting part, because nowadays that you guys are aware about it, private equity is one of the highly growing sector where private equity accountants are earning well. I would say, means if you compare with the mutual fund and other investment banking stuff, private equity accounting is in limelight now. So I would like to decode the complex private equity term into the very layman way which you guys can understand it, right? So I'll speak in English as well as in Hindi so that you can understand it in a better way to see this. If you want to understand the private and equity, I'll simplify it. Private equity, see, these are two different words. Private, it means here you can relate with the private group of people or investor like Elon Musk, Ambani, Adani, or banks or institutions or big family houses or wealthy people, even actors, colleges, universities. You can say private group of people, it means those people, right? Private group of people, if they invest in private limited companies through maybe bonds, equity, debentures or loan obligations, if they invest in this way, then you can call it as a private equity investment, right? Or private equity fund. So I hope now you got the idea. Private equity fund, it means private group of people, wealthy private group of people, if they invest through, means invest in a private limited companies through private instruments or unlisted instruments or equities, bonds, debentures or loans, that investment structure that you can call it as a private placement or private investment or private equity fund or private equity, even that investment as well, right? So this is called private equity fund. But here again, I'll simplify it. I said I'll simplify it. It means if you guys are aware about, let's say, credit card or home loan, then you can understand this in a better way. Private equity structure, exactly you can replicate with the or relate with the home loan. Let's say you have decided to purchase one under construction property. You have decided to purchase one under construction property. Listen this carefully, right? Let's say that property value is 10 lakh. So it means as a borrower, so let's assume it you are a borrower and you're looking for a 10 lakhs funding, right, from the bank for under construction property. So when you apply for a loan, bank will ask you two questions. One, that is your property documents, right? So it means you will submit all your property documents and income. So once you are eligible, bank will sign one agreement with approved amount. Means let's say bank approved 10 lakh rupees amount against your whatever documents and property which you have submitted, documents and all. So here understand one important aspect. Once the bank approved 10 lakh rupees, right, 10 lakh rupees limit to you, so that becomes, in a private equity, that becomes total commitment, means total loan amount that you can say, that becomes total commitment. Again, when the bank offer funding to the under construction projects, bank that will not provide funding in one go, bank will split that funding into, let's say, stages. Let's say initially bank will approve 2 lakhs, then 3 lakhs, 4 lakhs, 1 lakhs. In that way, you can see the structure. It means depends on the progress of that particular, construction. On the basis of that, bank will offer the funding. In the same way, in a private equity business, you can relate that investors will offer funding in a stages, right? And once the investor offer funding in a stages, let's say 10 lakh is the total commitment, and that total commitment investors are agreed with 4 stages. So it means 2.5 lakhs in one stage. So that stages you can call it as a capital call. Capital call, it means if fund invite or fund ask investors to pay the portion of a total commitments, so that amounts you can call it as a capital call. And once you received as an accountant, again, if that amount received to you, it means capital amount received to you as a capital call, then you can apply the accounting treatment like cash account, debit to capital call account. It's a simple, right? So now, so it means if you want to understand the total, that private equity terms and all, then I would say, first of all, try to understand the home loan or credit card, business structure. If you understand that, then you can understand private equity business as well. It is not a difficult one. Again, I'll go ahead. If you see, let's say bank offer funded. So out of 10 lakh, bank provided funding to you, let's say 2.5 lakhs. So here 2.5 lakh becomes funded amount. Remaining 7.5 lakhs become unfunded amount. In a private equity also, you can relate that. So it means funded and unfunded amount, where they charge, commitment fees or management fees or different fees on unfunded, funded amount both, right? Because in a private equity, they charge management fees on a commitment base, total commitment, whatever the commitment is. On the basis of that, in a private equity fund managers, they charge management fees to that particular investment. So understand that aspect as well. But here the important is funded and unfunded. 2.5 lakhs becomes funded because that fund, bank provided or offer or transfer or disburse that 2.5 lakhs to that let's say borrower. So that 2.5 lakhs amount, it will be eligible for interest. And in a private equity also, on a funded amount, fund will offer preferred return to that investor. So you can relate that. And then what about unfunded amount? See, unfunded amount, it means unused amount, but limit is still approved, right? If the limit is approved, then on unfunded amount also, private equity fund will pay that the unused fees, or maybe let's say upfront fees on that commitment as well, means spending or unfunded amount as well. So this is how structure works in a private equity fund accounting. And here then you will have to apply accounting treatment to that fees or expenses or funded, unfunded amount, means all that terms that will come into picture, and you will have to apply the accounting treatment to that. Again, the important aspect is, let's say you have received entire amounts, you have received as a that loan amount, you have received it. After 2 years, you got a job in IT company, and then you have decided to repay the half of the amount, or return that half of the, let's say 20% amount to the bank. So once you return that, let's say total outstanding at the moment is, let's say 8 lakhs, and out of 8 lakhs you have decided to repay 2 lakhs to the bank as a principal. So that 2 lakhs become the principal pay down, because here you are willing to pay, or you have decided to pay or reduce the principal amount from the total outstanding and return that amount to the bank. So that 2 lakhs become the total or principal pay down. Pay down, it means return of capital. So eventually that borrower want to return that capital and reduce the liability. And again, new outstanding amount would be 6 lakhs. So it means total, home loan terms that you can apply in a private equity, accounting, and even in terms. If you want to become a pro in private equity accounting, I would say do the study of home loan as well as credit card business, or credit lines and all, right? So let's say in a credit card also, total credit cards limit becomes your total commitment. Once you utilize some of the amounts, that becomes your capital call. In that way you can relate it, right? Because you guys are aware about credit card and home loan. So if you understand that, just relate that with the private equity accounting. That's it. It's not something different than the normal accounting. So I hope you got the idea about how private equity accounting works, right? And of course, if you like this video, please subscribe and share this with others as well. Apart from this, if you see the terms like total commitment, let's say distributions, fund received any distributions and all. Distribution, it means interest payments and all. Fund initiate the distributions as well. Fund initiate if the fund received proceed, that fund initiate the proceeds as well. Proceeds, it means return of capital to the partner. See, private equity business is a partnership business. 2 or more than that partners come together, they form the partnership, and they decide each and every terms on paper or documents or agreements, including expense, income, allocation, everything, and accordingly they manage the business activities and all, right? And see, this chapter, partnership chapter, you would have taught in your academics as well, L1 to 12 standard commerce. So go and check that, and same structure that you can relate with the private equity accounting also. So for now, as of now, I would say till here will stay, because video will go long and that will not, you guys will not enjoy it. We'll see you in next session with the same topic with the different terms. We'll cover that as well. Thank you. If you like this initiative, please subscribe and share this with others. Thank you.